In January of last year, something unusual happened that most people didn't notice until they checked their bank balance. Retired teachers, firefighters, police officers, other public workers who'd spent decades serving their communities opened their accounts and saw deposits they weren't expecting, sometimes a few $1,000s, sometimes much more. No warning call, no letter that arrived first. In some cases, no clear explanation at all until weeks later. That money wasn't a bonus, it wasn't a stimulus, it wasn't charity, it was back pay, money the government already owed them, triggered by one of the biggest Social Security changes in decades. And here's the part that still matters right now in 2026. Millions of people who are entitled to the same increases and retroactive payments still haven't received a single dollar. Many don't even know this law exists, so they're not asking the one question that would force the system to check their record. If you spent any part of your working life as a teacher, firefighter, police officer, city worker, county worker, state employee, federal employee under an older pension system, or if you're married to someone who did, especially if you're a widow or widower, there is a real chance you are owed money that never reached you. And the reason so many people are missing it is simple. The old rules were so confusing, so discouraging, and so unfair that thousands of eligible people never filed in the first place. They were told, "You won't get anything," so they walked away. Now the rule that blocked them is gone, but they're still invisible to the automated payment system. So let's start from the beginning, because once you understand what the old system was doing, you'll understand why this change is so important, and why you may still need to take action to get what you're owed. For more than 40 years, two provisions buried deep in the Social Security rulebook quietly reduced benefits for millions of public service workers. The first was the windfall elimination provision, often called WEP. The second was the government pension offset, often called GPO. Most Americans never heard of either one, but if you were impacted, you felt it every month, because these rules were designed to cut Social Security benefits for people who earned a government pension from work that did not pay into Social Security. Here's the simplest way to understand it. Many public sector jobs, depending on the state or the retirement system, pay into a pension plan instead of Social Security. So you can spend 20, 30, 35 years in a school district or municipal department and earn a pension, but those years may not count towards Social Security because Social Security tax was not deducted from those paychecks. Now that alone isn't the problem. The problem was how Social Security treated people who had mixed work histories, people who had a government pension plus some Social Security covered work from side jobs, summers, second careers, or earlier employment. Under the old rules, WEP reduced your own Social Security retirement benefit if you also received a pension from non-Social Security covered work. GPO reduced, often drastically, your spousal or survivor benefits if you were receiving that type of pension. That second one is where the heartbreak was the worst, because spousal and survivor benefits are supposed to be a safety net, especially for widows and widowers. But GPO had a formula that wiped out that safety net for huge numbers of people. The basic GPO rule worked like this. Your spousal or survivor benefit was reduced by 2/3 of your government pension amount. So if a widow was entitled to a survivor benefit based on her spouse's work record, but she had a teacher's pension, GPO could reduce her survivor benefit to 0, completely erased. That's not a small reduction. That's life-changing. That's the difference between stability and panic. And it wasn't rare. Millions of people, often the very people the country relies on, lived with these reductions for decades. Many didn't understand why their benefit was so low. Some were told the wrong reason. Some assumed it was just how Social Security works. Others were so discouraged that they stopped asking. Now, the major change. In early 2025, Congress passed a law, widely referred to as the Social Security Fairness Act, that repealed both WEP and GPO permanently. And not only did it remove these reductions going forward, it also made the change retroactive to January of the prior year, meaning if your benefits had been reduced under these rules, the government owed you back pay for the months those reductions should not have applied. Once that happened, Social Security began processing retroactive lump sum payments and adjusting monthly benefits upward, and the numbers were not small. Many recipients saw retroactive payments in the thousands. Average increases discussed publicly included a few $100s per month for many retired workers, and much larger increases, often over $1,000 per month, for many surviving spouses who had previously been hit hardest by the pension offset. For a widow who had been receiving nothing because GPO wiped out the survivor benefit, the change could mean going from $0 to a meaningful monthly check, plus retroactive money for past months. So if the law changed and millions of people already got paid, why are we talking about this in 2026? Because implementation is not the same as completion. A large number of people have not been made whole, and there are two groups in particular who are at the highest risk of being missed. The first group is people whose records were already active in the system, but whose retroactive payments or increases were calculated incorrectly or incompletely. There have been reports that some new claimants or recently processed claimants only received retroactive adjustments back a limited number of months, even though the retroactive date established in the law goes back further. Lawmakers have pressured the agency to correct this for affected claimants because the law's intent is clear. If the reduction should not have existed during that retroactive window, the money is owed. The second group, and this is the one that keeps slipping through the cracks, is people who never applied at all. And the reason they never applied often makes complete sense. For years, many spouses and surviving spouses were told, "There's no point, your pension will wipe it out." That answer was based on the old GPO rules. If the calculation meant their survivor benefit was reduced to zero, they were discouraged from filing. Some were even directly advised not to bother. But now those rules are gone. So what happens? They're not in the system as an active beneficiary. They don't have an existing payment record for Social Security to automatically adjust. And if they never filed, the automated process cannot find them and send them money because the system can't pay what was never claimed. That means there are widows and widowers walking around right now in 2026 who still believe they are not eligible, when in fact they may be eligible for benefits they were denied for years. If your spouse passed away and you were told the pension rules eliminate your survivor benefit, you need to hear this clearly. That answer may have been correct under the old law. It may be wrong now. The only way to know is to contact Social Security and ask directly about eligibility under the repeal of the government pension offset and windfall elimination provision. Now, I want to make this practical. Here's what you should do, step by step, because the biggest reason people miss money is that they don't know what to check. First, review your current benefit amount. If you already receive Social Security, look at what is being deposited now and compare it to what you were receiving before the law took effect. If your benefit jumped during the rollout period, that's a sign your record may have been adjusted. If it never changed and you had any public sector work history tied to a pension, don't assume that means you weren't eligible. It can also mean you were missed, or your record wasn't flagged properly, or your application history is incomplete. Second, think carefully about your work history, not just your main job. This law affects people who had work where they did not pay into Social Security because they were in a pension system. That includes many teachers in certain states and districts, many firefighters and police departments, and some categories of federal workers in older retirement systems. It can also include other roles people don't always think about as government careers: school staff, cafeteria workers, bus drivers, municipal employees, sheriff's departments, and certain public hospitals. The key question isn't your job title. The key question is, did you earn a pension from work that did not withhold Social Security tax? Third, check your Social Security contact information and direct deposit details. A shocking number of missing payment problems are caused by simple administrative issues: an old bank account on file, a changed address, returned mail, or incorrect deposit instructions. If your payment was issued and your account changed, that money might not have landed where it should. It doesn't always disappear, but it can get trapped in process until you correct your information. Fourth, if you are a surviving spouse who was previously denied because of the pension offset, you may need to file or reopen your claim. This is the most important point for widows and widowers. You may not be in the system as an active beneficiary. If you never filed because you were told you'll get nothing, you may now need to file a survivor claim under the updated rules. When you contact Social Security, be specific. Don't just ask, "Am I eligible?" Ask directly about eligibility under the repeal of the government pension offset and windfall elimination provision and whether a new or reopened claim is required. Fifth, be aware of the tax impact of retroactive payments. When you receive a retroactive lump sum, it can show up in the year you received it, which can surprise people at tax time. There is a tax concept often referred to as a lump sum election for Social Security payments, which in some cases allows you to allocate the benefits to the years or years they would have been received, potentially lowering the tax impact. This is not something everyone needs, and it depends on your full income situation. But if you received a large retroactive payment, it is worth asking a qualified tax preparer whether you can reduce the tax hit using the appropriate election or method. Now let's talk about why this matters beyond the numbers, because this isn't just about getting a bigger check. This change matters because those old rules didn't just reduce benefits. They created confusion, discouragement, and silence, especially among seniors who don't have the energy to fight bureaucracy. People spent their lives in public service and then entered retirement believing, "I don't qualify. I get nothing as a spouse. There's no point in applying," and they accepted it. Then the law changed, but the belief didn't. That's why so many people remain unpaid in 2026. The system doesn't automatically correct the situation for people who never entered the process. It corrects active cases first. Everyone else has to raise their hand. And if you're the person who needs to raise your hand, you need to do it soon, because the longer you wait, the more time passes, the harder it gets to reconstruct records, reopen claims, and correct errors. So here is the simplest way to think about your next move. If you have any public service pension history and you've never checked whether WEP or GPO affected you, you should check. If you're already receiving Social Security and your amount never changed, you should verify whether the repeal was applied correctly to your record. If you are a widow or widower who was told you get nothing because of a government pension, you should re-ask that question under the new rules, because the answer may have changed. And if you know someone who taught school, fought fires, served as police, worked for a city, county, state agency, or under an older federal pension system, send this to them. Most people who are owed money don't miss it because they don't want it. They miss it because they don't know to claim it. Billions have already been paid out under this change. The only question left is whether every eligible person has actually received what they're owed, or whether some of that money is still sitting behind a closed door that only opens when you knock.